The fire that fuels the Shiba Inu engine is sputtering. Analysts are dropping their alerts. Whales are moving silently. The latest burn data shows an alarming collapse in token destruction, challenging the core scarcity narrative. We need to investigate why this burn rate is crashing and what it truly means for the future price of Shiba Inu. But what am I even talking about? Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. As of November 9th, 2025, Shiba Inu is trading at 996 units. The 24-hour trading volume stands near $152 million, reflecting a market stabilizing after a recent flurry of whale activity. The overall market capitalization is firm at close to $5.8 billion. Sentiment remains cautious, with traders focused on a breakout above the key psychological barrier of 1,000 units. This consolidation phase provides a critical backdrop, as the lack of aggressive price movement highlights the community's heightened focus on fundamental tokenomics, specifically the token burn mechanism. The core event is the catastrophic failure of the daily burn rate to sustain any meaningful pace. According to data tracked on November 8, 2025, the daily burn rate plunged by over 90% compared to the previous week's average, with a mere 857,419 Shiba Inu tokens permanently removed from circulation. This dramatic and sustained slowdown over several days has officially escalated into a burning crisis, creating a massive disconnect between the community's high expectations for scarcity and the Shibarium network's current performance. This low burn velocity is the single most pressing tokenomic threat to the Shiba Inu project right now. The stark evidence is sourced directly. The weekly aggregate burn total is now below 40 million tokens, a figure considered severely inadequate given the circulating supply that exceeds 589 trillion tokens. Further validation via data reveals the root cause, a prolonged and significant decrease in the number of daily transactions on the Layer 2 network. The transaction count has dipped below the critical 3,000 mark multiple times this week. Since the burn mechanism is directly correlated with the gas fees collected in bone generated by Shibarium transactions, low network usage directly translates to low burn numbers. A significant portion of the meager tokens burned came from single low-volume community wallet transfers, not high-volume, automated Shibarium processes. Analysts specializing in tokenomics note that this development is highly concerning. The fundamental valuation model for Shiba Inu relies on the eventual large-scale reduction of its supply to increase token value. When the burn rate drops this severely, the scarcity premium in the token's price is immediately eroded. Crypto researchers highlight that the current burn rate would take an implausible number of years to make a significant impact on the supply, effectively nullifying the burn narrative for short to mid-term price action. They suggest that the market must demand greater transparency and more aggressive burn mechanisms, especially a dedicated portion of ecosystem revenue, to restore confidence in the tokenomics. The current token burn rate is acting as a strong bearish weight on the price, despite bullish technical signals elsewhere. The reaction from the community has been one of deep frustration and demanding accountability. On the official channels, user queries regarding the burn mechanism have dominated discussion. Developers have acknowledged the low rate, citing the need for further optimization and the full implementation of the official burn portal, which they stated is still undergoing rigorous testing. Influencers within the community are working to shift the focus from simple burn numbers to Shibarium's utility, arguing that long-term adoption and subsequent high transaction volume is the only sustainable way to increase the burn rate. However, the immediate sentiment is negative, with many retail investors expressing fear that the team is failing to deliver on the fundamental promise of scarcity. The direct market impact of the collapsing burn rate is a suppression of bullish momentum. While recent whale accumulation and technical analysis suggested an imminent test of the 1020 unit resistance, the burn crisis is acting as a powerful brake. According to trading data, large sell orders are being placed whenever the price nears the 1,000 unit psychological level, with sellers likely capitalizing on short-term rallies due to a loss of faith in the long-term supply reduction. This is increasing overall market volatility, but is fundamentally preventing a sustainable breakout. The low burn rate essentially caps the potential price ceiling. As investors feel, there is no fundamental mechanism to warrant a higher valuation based on decreasing supply. The short-term outlook, next 30 days, is cautiously bearish regarding the tokenomics, even if the price holds steady. Until the development team announces and successfully deploys a significantly more aggressive and automated burn mechanism, the price is likely to remain range-bound between the major support at 900 units and the heavy resistance at 1020 units. Analysts predict that any short-term rally will be quickly faded by selling pressure unless a major ecosystem catalyst, like a partnership or a successful burn portal deployment, can fundamentally change the burn narrative within the month of November 2025. The midterm forecast is highly dependent on technical execution. If the development team can successfully roll out the planned automated burn portal and the Shibarium network sees transaction volume consistently exceeding 15,000 daily transactions by January 2026, the midterm forecast becomes moderately bullish, targeting the 1150 unit range. However, if the low burn rate persists, analyst models project a slow bleed, with the price potentially retesting the 850 unit support level as the market loses patience with the lack of progress on the supply front. The next 90 days are a crucial test of the Shibarium development team's ability to deliver on their core utility promise. The long-term success of Shiba Inu hinges on a single factor: Shibarium's adoption scaling to millions of transactions daily. If Shibarium becomes a Layer 2 powerhouse over the next few years, the burn mechanism will eventually destroy trillions of tokens, driving scarcity and potential price surges toward the 3,500 unit mark and beyond by 2028. However, if the current low utility and low burn rate become the norm, the project risks stagnating. Reports on meme coins suggest that tokens that fail to transition from meme status to utility-driven platforms rarely survive long-term, making the burn mechanism's success a life-or-death scenario for the long-term price action of Shiba Inu. The current burn crisis is a direct reflection of the need for greater ecosystem expansion. The team is currently focused on the Shiba Eternity game and the Shiba Metaverse, both of which are intended to drive high transaction volume on Shibarium, thus fueling the burn. New partnerships with technology providers for decentralized AI integration are also a part of this strategy. However, these ambitious expansion projects must transition from announcements to operational, high-traffic applications immediately to solve the underlying transaction volume problem. Without successful and widespread adoption of these utility tools, the burn rate will remain critically low, and the long-term vision of Shiba Inu as a scarce asset will fail to materialize. So the hard truth is that the current burn rate is simply unsustainable. The Shibarium team must deliver on the automated burn portal now to restore market confidence. This is a critical pivot point where utility must translate into scarcity, or the entire tokenomic thesis crumbles. Keep your eyes on those Shibarium transaction charts. Do your own research, stay safe, and I will keep you updated every step of the way. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.